Wall Street Bets is extremely good at one of the two things that need to be done when it comes to trading. Now, this isn't investment advice or trading advice. This is just for entertainment. But I want to give some props to Wall Street Bets before I give some feedback. Now, Wall Street Bets does a really good job when it comes to idea generation. Now, when it comes to assets like GameStop, AMC, and others, these guys do a lot of fundamental analysis. Sometimes I see technical analysis, but honestly, there's a lot of fundamental analysis that does pretty well. Now, the one area where I think there needs to be a lot more conversation in the subreddit is the other side of the game. One side of the game is idea generation. The other side is risk management. Now, I rarely ever see anything on Wall Street Bets regarding risk management, and maybe that's also to do with just the general idea behind the subreddit. I mean, just take a look at the guy on the yacht. You know, it's more so, and bets is in the name. It's more so like, hey, we found something, let's bet on it, and maybe bet the farm on it, which, you know, people are allowed to do. But the unfortunate thing is that when when a stock moves against you and energy is moving against you, there are going to be a lot of what people call here on the subreddit paper hands. Here today we see GameStop is currently trading at $66. Yesterday it was at $90. It was holding on pretty well around that $90 range, and then it just dropped. Right now it's at $64. And I wonder how many people actually did some risk management to say, hey, I'm willing to get in at this price. If it drops X percentage below this price, I'm gonna cut my losses. Or versus how many people just bought it at a random price. When it started going down, they just held on to it and held on to it and held on to it because that's what people were saying to do on here. Yet, when you think about your own portfolio, how does what someone says in a Reddit post impact your portfolio? And this isn't something that just impacts Wall Street Bets. I even see it sometimes in our space in gold and silver. A lot of people will say, hey, I put everything into gold and silver, and that's fine. You know, like, I don't know what you're doing, and you don't know what I'm doing. You might have a better idea of what you're doing with risk management than I do. But I'm going to show you what I do as far as risk management is concerned, just to give you a better idea of how I kind of see markets. So here is a general idea of my risk management. So these are all random stocks. These are all random numbers and random, you know, for these are all different actually asset classes here. Quantities, entry points, the actual cash amount that is allocated from my portfolio to a given asset, potential cash loss, percentage return, stop loss, cash return at the end of the time period or time horizon, total percentage return, percentage stop loss for the time horizon, etc., etc. These are all long positions, though. I personally use long positions currently right now, though I would like to get into more short positions, but that's for another day. Beta for each of the assets that I use, the weight within my portfolio, the weighted beta in my portfolio, the general risk, or let's just say beta of my portfolio. So for example, this is all an example, by the way. I shouldn't keep saying my, but let's just say in this portfolio, 3% more volatile than the S&P 500, 68% of the time. It's 5% more volatile than the S&P 500. Oh, that actually should be 27% of the time. Got to change that. And this is 7% more volatile than the S&P 500, 5% of the time. Now, this is all standard deviation, which is basically what beta is, and generally, and also the implied Sharpe ratio monthly. So this monthly Sharpe ratio is pretty good. It's over 3%, 4.9%. So for every every percent of risk, there is a 4.98% amount of reward that gets added here, which is good. Now, let's take a look at how this is all figured out. So when it comes to risk management, I'm not only just looking at the beta of a stock, I'm also just looking at my overall portfolio. So how much cash is going into this stock? How much cash is going into this stock? And does this stock is it more risky than the S&P 500? This one's less risky. This one's 20% more risky than S&P 500. This one is 119% more risky. This one is actually negative to the S&P 500, negative correlation, which is pretty interesting. So there are stocks that you can choose that can help you balance your risk. Now, in the case of GameStop, especially if you got in, let's say, a couple of weeks ago, the beta for that, I honestly, at this point, I wouldn't even know how to figure that one out. You might have to go on like a day-to-day basis to see what the actual risk is given your time horizon. And again, it's also based on your time horizon. When do you want to get in and when do you want to sell? Now, for me, I personally like a month to 3 months, and that's what I use. And sometimes it'll be a little bit less. Sometimes it'll be a little bit more. But I don't sell until the catalyst that I'm looking for allows the trade to happen. Or let's say, for example, there's another catalyst I just didn't even expect or just came out of nowhere. I'm going to take advantage of that and sell. So let's just take this stock, right? It's worth $3,315. You get one share of that, and I'm hoping by the end of a month, I have a 4% return, and it'll give me $3,448 by the end. Overall, a cash return of $132.63 added to my portfolio. This stock, I'm going to get 10 shares of it. It's at 114. It's about, in my overall portfolio, about $1,000 or so dollars. And hoping it gets to about 116. And we're looking for maybe a 2% return and $22. So all of this stuff just gets added up to this final result here. And sometimes it's a little bit more, and again, sometimes it's a little bit less. But I'm aiming for a 5% return, essentially, for the month, or maybe for 3 months, or so on and so forth. And all of that is considered within the final risk of the overall portfolio. And this is something that I think needs to be talked about more when it comes to Wall Street bets, because again, the idea generation is great. Hey, here is an asset, GameStop has this, and this going for it, and I think it's a nice play. Consider this within your portfolio. Consider this and add it if it makes sense in your portfolio as regarding risk management.